Hey guys, super excited. You're welcome to another financial trading culture series where we treat you well, showing you what is possible in the market. And today we're having a recap of an amazing opportunity that we had in the institutional trading concept community, GBPCAD, and currently it has given us over 1,000 pips. And that is what we're talking about. Guys, if this is your first time, guys, that you're visiting, come on, guys, make sure you click on the subscriber button and also on the notification bell so that whenever we upload the next video, you will not miss out on this. I'm really pumped up about what is happening right now. Guys, I tell you, the real fact is that you can also catch it. But guys, there are a lot of stuff that are needed for you to catch this kind of pitch. There's a lot of tenacity. There's a lot of belief that you need to have, you have generated over time that can allow you to have this kind of result. So what do you do in most cases? The thing what you want to do is that you want to make sure you maximize your higher time frame. Now, a lot of time people don't know the essence of higher time frame. I quite understand that when you go to 1 hour, you can catch, you can catch some short moves, can catch some 79 pips, you can catch some, catch some 53 pips. Oh, it's coming down again, you can catch some 66 pips. But the truth of the matter is that you are going to be doing a lot of work. You're going to be doing a lot of work. So that means that you're going to be entering at least 2 to 5 trades a day, and altogether in a week, you're going to be having close to maybe like maybe 10 to 15 trades in a week, which is not bad because as an intraday trader, you're good to go. But can you simplify it in such a way that you can reduce it to an average of 2 trades to 5 trades a week, so that you would not be trying to catch each moves from here? You're also trying to catch the one that is coming down, the one that is coming down, the one that is coming down, and you're also trying to catch the one that is going up. And this could be a lot of mental, stuff. Okay, but like I do tell you, every strategy works. It just depends on the person that is using it. Okay, so you want to make sure you work on your expertise. You want to make sure you work on your back testing. You want to make sure you personalize the strategy. You want to be able to know what time is the best for you to go in on the strategy. All of these, no one can answer except you who is ready to use the strategy. And for us, we trade the institutional trading concept, and which is one of the things that we do. And with this, we catch the move from monthly time frame, 3-month time frame, weekly time frame, and sometimes daily time frame. As a matter of fact, a lot of time, our daily time frame is the lower time frame, coupled with sometimes 4 hours, which is not always very common. So let's get to the screen. Why did we enter this trade? Now, if you check this trade, we've got a high and we've got a low from here. And this means that the market came in from this high curve and to this low curve. And whenever you're on the high curve, that is where you look for sell long term. Whenever you're on the low curve, that is the area you look for buy. However, when the market is preparing for a retracement, you can catch the retracement down before the main move up. So we are actually preparing to take the buy so that can take us for another maybe 1 year or 2 years long entry. And this is possible, but you must understand the approach. So having said that, what do we see? We realize that since we know that the market is currently reacting to this zone, and we add a break of structure here, which means that the market will be coming here. So, and you agree with me that also we have a lower high that was destroyed here for the market to retrace back. So basically, we are waiting for the market to come here. So while we're waiting for the market to come here, we decided to trade the trend. Okay, so having said that, let's zoom what happened. So this is the screen. This is what we had. We had a rally-based drop, and this is a sell zone, and the market drops. If you pick this trade from here, you will have caught about 940 pips, and immediately it retraced back again and came into this rally-based drop, and it came into this sell zone. So when the market came into this sell zone, this is where we got a notification, and from here we went to our lower time frame to catch that move. And on the lower time frame, what did we get? We are able to identify the last uptrend move, and we can see that the market broke structure here, and we have a change of trend here. As the market broke structure, this became our entry zone. And that's how simplified trading can be, especially when you are able to narrow it down. And here, we're able to go to 15 minutes. Let me go back to 4 hours. Then let's use we're able to go to 15 minutes. And you can see that the market came into that place, created a rally-based drop for 15 minutes. So this was actually a 7 pip stop loss. About 10 pips, 7 to 10 pips stop loss entry. Okay, 10 pips stop loss. Okay, so we got in on this trade, and that was it, guys. That was it. Now, another thing if you have attended any of my free meeting or any of my training, you agree with me that this trade came in during the London session, during the New York session. And because of that, this approved our sell zone, our sell here. So that's why I tell you that you must understand how this works so that you will not be missing out in any trade, especially the ones that could give you this kind of long-term profit. Now, a lot of emotion right here, because when it dropped well and did some, reversal again. And when it did that reversal again, we didn't stack it. Okay, we did not stack it. We just picked this particular trade and it dropped really big. So when you want to catch this kind of huge drops, you want to pick them from weekly time frame, pick them from monthly time frame. And with that, you're good to go. So this is an average of 106 risk reward trade. And you can see where we are right now. You still expect some more move down, okay? And having said that, we're expecting the market to do a retracement back to this rally-based drop, okay? So we can get a retracement back to this rally-based drop, then we can catch this last move here to this place on 5-minute time frame. Okay, so this is a good 1,044 pips, which is very, very good for anyone. But guys, in as much that this is what we expect every time, you must make sure that it is your style of trading. This is a proper swing trading. Okay, as a matter of fact, sometimes in a week we don't pick more than 2 trades or 3 trades in a week. Okay, it's a full-time swing trade, and when we hold this kind of trade, it pays us well. So instead of us catching 10 minutes, 1 hour, goes up again, goes up, then come back again and start dropping. You want to just catch this main top and leave it, let it run. Because that's the essence of trading. You don't want to be going out, coming in, going out, coming in. Okay? So whatever suits you, your strategy will determine your approach. So you want to make sure you backtest, you personalize your strategy, and experience all you need to experience. Okay, guys, I'm really pumped up about the possibilities that is available in the Forex market. I'll keep you guys posted on the update on this trade, because this is a 1 to 106 risk reward that we are catching out. This is around 1.63, okay? And if you zoom this out, we're around 1.6353. You can see that. So this is the last time I did the video, it was around 6604. So right now we're around 1.63, and that is very, very good. Okay, for a lot of us that is holding it in the community, congratulations. This is what we're talking about, 1.66 right now. So if we can get this move back, woo, that'll be a very good one. You can go in and catch it and we're good to go. Okay, so this is what I have for you guys. And I told you guys about CHF JPY. We are patiently waiting for the conditions to be met, and I'll make sure you're in the Telegram group so that whenever the trade is complete, you will not miss out on it. And if you have not signed up for my psychology of trading course, please go and sign up, because you don't want to miss out. I put together a 7-module training that you will get once you sign up every single day for the next 7 days. Sign up and enjoy what we're talking about, guys. Thank you so much for your time. My name remains Mayowa Owolabi. I'll see you in the next episode. Make sure you click on the subscriber button if this is your first time, and on the notification bell, and make sure you follow up on every other videos we upload. Guys, thank you so much for staying. Click on this, keep investing, keep following the rules, and make sure you're consistent. That is all what trading is all about. I'll talk to you soon. Peace out, guys. Bye for now.